frankly, the markets are a little bit all over the place. Many operators saying this is a huge communication blunder from the Bank of England, but also in thought they can't end these purchases on Friday. What is going on at the bank?
Gosh, that question surprises me. I thought you'd ask me on to talk about AC Milan's latest home defeat. But if that's what you want to do...
I love Chelsea, so we can also talk about football.
OK. But if the Bank of England concerns you more, yeah, what is going on? Well, they introduced this facility, which they always said was time limited, and they wanted to allow the pension funds to readjust their portfolio with these liability-driven investment strategies. And I think what they are concerned about is giving the impression that they have one foot on the accelerator and another foot on the brake for an extended period of time. Because on the one hand, the Monetary Policy Committee at one end of the corridor in the bank has said we are going to go for QT, quantitative tightening, withdrawing support from the market. And at the other end of the corridor, the Financial Policy Committee, also chaired by the governor, of course, has said, well, we actually are prepared to do some buying. But they clearly define that as being related to particular market turbulence and instability. So I think what Andrew Bailey was saying last night was simply that particular scheme comes to an end. That's what it's for. Now, of course, if we have renewed turbulence, who knows? And the central bank will never say never. We will never intervene. But that's what I think, that's how I read what they're saying at the moment.
But are you expecting the markets just to test this and test this and test this until the Bank of England does more?
Well, let's try to unbundle what you mean by the markets. I mean, this is a fairly specific intervention designed for particular pension funds. Now, that's what he is talking about bringing to an end. And he's saying those people who are short of liquidity should use this scheme quickly. There is, incidentally, another scheme that has been announced, which is called the Temporary Expanded Collateral Repo Facility, TCRF. They've not got great marketing people in the Bank of England, I think. But so the TECFRF is open to people to post collateral with banks and for banks in turn to post collateral at the central bank in order to get cash. So there are various routes. Now, of course, there are other market participants who are not directly affected by this, who are just looking at this and saying, look, we don't like sterling assets and we don't like the pound. And therefore, I can't rule out, and nobody can rule out the fact that there will be sort of knock-on consequences in other markets.
But so Howard, so effectively this tool that you're mentioning, without the great marketing skills, it's not really a backstop. Is it a backstop when the current backstop on Friday runs out, but it's not necessarily for pensions, it's just for banks to be able to draw into?
No, but it's for clients of banks. So we don't need it ourselves, but it's for our clients, for their pension funds. We're not big in this market as it happens, but we do have some clients of that sort who could deposit collateral with us. We in turn deposit at the Bank of England and we can provide liquidity for them. Not been used so far, but it could be.
So is there a danger in the markets over the next 2 weeks until we also understand what the government's plans fiscally are? And could this be a stroke of genius of the bank saying, look, we stop on Friday because, as you say, it's fairly difficult to take away with one hand and give with the other?
Well, I doubt if even the governor would say this was a stroke of genius at this point because nobody knows what will happen over the next couple of weeks. I mean, you're right to point to the fact that the key thing is some certainty about the government's fiscal policy, and we're not going to get that until the end of the month. So I fear that the next couple of weeks is going to be a bit of a rocky ride. Maybe people can hope that once everybody gets to the IMF, the governor's already there, I'm off this afternoon, that people will start to focus on global economy and big issues, and the UK will perhaps fade into the background. That'd be nice to hope. But
do you think they will, or do investors shy away from the UK for almost years to come because of what we've lived through in the last month and a half?
Well, we'll see. Investors are driven by the possibility of making some profit. At the moment, they say, many of them, the UK is too uncertain. I've heard people bandy around UK is uninvestable at the moment. These sort of words that investors like to use. But, they will look at, but it looks as if we're having a sort of repricing of UK assets via the fall in the exchange rate. At some point, they'll be attractive to people again. But at the moment, it's a bit difficult to entice people into UK assets. And we're seeing that in the fall in the equity market.